Hi, Todd VanDenburg here with VanDenburg Capital Management and another Uncommon Sense update. So it's been a few weeks since my last update, and to be honest, I, I sort of had to take a step back because this topic I'm going to talk about today is maybe controversial and might upset some people. And so it was news a few weeks ago, and I had to sort of sit on it and digest it to make sure that I came out in the most math-based way with my analysis. So here we go. A short while ago, the President of the United States, President Biden, announced that he was going to be eliminating student loan debt for people making less than $125,000 a year, up to $10,000 or even $20,000, depending on the type of student loan that you had, federal student loan that you had. And this is the thing that I've sort of been sitting on. So let me just cut to the chase. This action, in my opinion, is economically and for what it's worth, I think, a morally inappropriate action to take. We'll leave my moral judgment out. Let me just talk about the math and the economics of this. So first things first. This elimination of student loan debt for many people is going to cost anywhere, the estimates are as low as $300 billion up to $1 trillion. But what the administration is currently saying is well, they don't really know exactly how much it's going to cost. So if we've all learned anything from our federal government in our lifetimes, it's that whenever they estimate what something is going to cost, it's usually cost more. And so we should expect it to be probably closer to the $1 trillion range than the $300 billion. And so here's why I think it's a bad thing economically. First off, this amount of money, I'm just going to, let's call it $500 billion just to land somewhere close to the middle. This does not actually, in my opinion, cause additional inflation, because most of the people that who are getting this loan forgiveness, they haven't had to make payments on this debt for 2 years, and most of them haven't. So it isn't like forgiving this debt is going to all of a sudden inject a bunch of new money into the U.S. economy, because the money that has been injected has already been injected over the past 2 years. It's not like by forgiving the debt, all of a sudden a significant number of people are going to have a bunch of new money that they can start spending. And again, as I've talked about in prior updates, the biggest problem we have right now from an inflationary standpoint is we have way too many dollars in the economy, borrowed dollars that, over the past 2 years that the government borrowed from the future in order to, sort of soften the impacts of the closings due to the pandemic. So I don't think it's heavily inflationary, but it does make the U.S. government's balance sheet less attractive, no doubt, right? And let me give you a quick example. Let's say that you spent 10 years of your life, you saved $100,000, and you lent that money to somebody so that they could pay you interest on a monthly basis. So that means your net worth is $100,000, assuming you own nothing else. The fact that you loaned $100,000 to somebody else, that's still an asset to you because that money is still owed to you. So your net worth is $100,000. Now, if the government comes in, or let's just say that the borrower defaults on that $100,000, and you're never going to get that money back, your net worth is now zero. And so that's sort of what the federal government would be doing by eliminating this federal debt, is it's lowering the net worth of the United States, making the U.S. government or the U.S. economy, the U.S. balance sheet worth less, up to $1 trillion less, just because they're going to wipe out the debt to these people that currently hold some student debt. Now, why is that a big deal? Well, when we look at the what's going on in the U.S. economy from a federal government standpoint, we see the national debt creeping up on $31 trillion. I mean, it's hard to imagine when, like, in 1981, the total US debt of the United States was about $1 trillion. So it now sits at almost 31 trillion. And, we're paying interest on this debt. And as I'll show you in a chart here, real quick, you'll see that the interest payments on our debt are continuing to rise. And this is only going to get worse as the Federal Reserve continues to raise interest rates, which they sort of needed to over the past decade. But in my opinion, right now, they are way too aggressive with the raising of interest rates. And their actions could actually cause some economic issues in the country, because their actions are likely to cause a business slowdown, when what we truly need in our country to lower inflation is for more goods and more services to be produced to consume so many of these dollars that have been printed and spent over the last 2 years. One last item that I want to talk about as far as this, loan forgiveness. The administration, has come out and said, hey, don't worry, this, student loan forgiveness is totally paid for, because, the amount of deficit reduction that the federal government has done over the last year is way more than they're anticipating it's going to cost for this, student loan forgiveness. Well, I hate to say it, but that's just smoke and mirrors. I'm going to show you another chart, and what you see on this chart is there's a line that shows what the government spending was year over year in the years preceding the pandemic, and then you see 2 years in a row where our government spending was just bloated, like over 8 trillion and over 5 trillion back-to-back years. And then when you look at what the current government spending is, it's still more than pre-pandemic, but yes, it's less than during the pandemic. But are we really going to say that we've done a good thing and we're paying for this with deficit spending, when the only reduction in spending has come because, we've opened up and we don't need all this stimulus from the federal government? So it really frustrates me to see either the people that are talking about this as being fully paid for don't understand basic economics, or they're just lying to us. And it's really frustrating because it's this kind of misinformation and anxiety that caused by, where's our economy going, with our national debt and interest rates rising. This kind of anxiety is causing a lot of the volatility that we're seeing in the markets. So just to be clear, everything I'm talking about as far as student loan debt goes is that it's a bad economic decision. The government is doing nothing to address the cost of college, to address all the people that don't have federal student loans that came from their college or from buying a truck to go be a carpenter. They're not talking about any of that, and they're not doing anything on a go forward basis to make sure that people aren't borrowing more than they should to pay for an education that may or may not be of value. So just from an economic standpoint, this just seems really, really ill-informed, and it doesn't help the status of our country as far as an economic power. And that's why it concerns me when they do this stuff. And that's why in our portfolios, we actually started a couple months ago, and we're continuing to take a little more conservative approach to try to protect ourselves from what feels like a never-ending series of bad judgments by the people in Washington, the bureaucracy, as well as the elected officials. So I don't want to leave the impression that I'm all doom and gloom and the world's coming to an end and we should all go to cash and go live in our bunkers until this all works itself out. But the trajectory is not amazing. And I'll just say one last thing on this subject. Several years ago, when people were asking me, Todd, why aren't you more concerned about the impending fiscal doom in the United States? And I said, hey, look, right now, if you imagine you're driving to Arizona, and and you might be concerned about driving into the Grand Canyon. And if you drive too long and too far, you can fall into the Grand Canyon. But if you're in San Francisco and you're in your car, to be worried about the Grand Canyon is sort of not really meaningful. It's not reasonable. Well, we're a lot closer to the Grand Canyon. I'm not going to say that we're even in Arizona yet, but we're still heading in that direction. And this fiscal cliff that we're marching towards is starting to concern me. And that's why I'm starting to take a little more conservative position in portfolios, because if the government continues down this path, they could cause some real long-term economic and financial issues in our country. The only bright side to all this is, as the Federal Reserve continues to raise interest rates, there actually is a place that we can go to should equities start to really look bad. Is, if interest rates go up, then we can start moving to fixed income to get some better interest rates there. There's an online bank that we use for all of our excess cash. And just a handful of months ago, they were paying like what, 0.5% on cash, and now they're paying 2%. So that's that's a 400% increase in the amount of interest that we're earning on our cash. So that's a real positive thing, but it's certainly not something that I'm super excited about, because I'd much rather that we not hurt the U.S. economy and have equities in companies continue to make additional profits than bury us and have our only potential avenue for making any money at all is to go to government treasuries. So sort of a lot of information there. I did say something about I think it's morally wrong, this student loan forgiveness, but nobody really cares about my moral judgments, so I'm not going to say another word on it. From a pure economic standpoint, this is not a good thing. And it adds to our increasing level of concern about the direction of the U.S. economy and the potential for continued profits in publicly traded companies. So we're watching it super closely. We think you should too. If anybody has any questions about this or any other financial matter, we're living in pretty volatile times. Please just send me a message, give me a call, send me an email. I'm happy to respond to any questions anybody might have. But that was your update. I hope you enjoyed it. If you did, give us a like, give us a share, and I'll be back again soon with another Uncommon Sense update. Thanks for watching. If you'd like to be the first to hear of more Uncommon Sense updates like these, please click the subscribe button below. We'd really appreciate it. Thanks again.